Please come to question number 47. Today you note down one homework. Read disclosures. Okay. For exam purpose, the disclosures of this standard is not very important. So please read it as homework. But this is an important question on screen. Question 47. AX and BX Limited amalgamated on and from 1st January 20X2. A new company ABX was formed to take over the business of the existing companies. Is it right? Next line. Summarized balance sheet. Rupees in 1000. Non-current asset, property, plant and equipment, financial asset, investment, current asset, inventory, trade receivable, cash and cash equivalent, equity and liabilities, equity, share capital, other equity liabilities, non-current liabilities, financial liabilities, borrowing, current liabilities, trade payable. ABX Limited issued requisite number of shares to discharge the claim of equity shareholders of the transferor companies. So these two companies AX and BX are called transferor companies also. Okay. Or acquiree companies, legal acquiree. Prepare a note. So question number 1. Prepare a note showing purchase consideration and discharge thereof. And draft the SOFP of ABX Limited. Assume BX Limited is a larger entity. Assume BX Limited is a larger entity. And their management will take the control of the entity. And their management will take the control of the entity. So what we will assume from this statement? That BX Limited will take the control. So BX Limited will be called as accounting acquirer. Okay. And this other company AX Limited is the legal acquiree. So while preparing the financial statement of ABX Limited, we are going to record the assets and liabilities of AX Limited at fair value due to business combination. With respect to this entity, the relationship is of business combination. But with respect to BX Limited, at book value due to reverse acquisition. Now in the question there is a last table which says the fair value of the net asset of AX and BX Limited are as follows. Assets AX, BX, fixed asset, inventory. So two items are there for which fair values are given. And the last line gives you the fair value of entire business. So where will this fair value be required? Fair value of AX Limited will be required for fixed asset and inventory. And then fair value of business of AX Limited will be required for calculating the number of shares to be issued. The number of shares to be issued will be 11,000 divided by fair value per share of BX Limited. Fair value per share of BX Limited will be 14,000 is the total value of BX Limited, and the number of shares of BX Limited are 700. So that is 20 rupees. So for AX Limited, the number of shares to be issued will become equal to the fair value of this entity. So they should get something worth 11,000. Is it right? And what they are getting is share whose value will be 20 rupees per share. So they will be discharged by issue of 550 shares. Then what is the question? Question is to prepare the consolidated SOFP and also calculate the purchase consideration. One more question you had from my side. Past journal entries in the books of ABX Limited. Write down past journal entries in the books of ABX Limited. So write down first this diagram which I have drawn for you so that you can understand better. Dear student, write BS balance sheet of AX Limited at fair value due to business combination, BX Limited at book value due to reverse acquisition. The question has specified that BX Limited shareholders will get control over the combined entity. Written? Everybody, show me. Now write a note. In the given case, although ABX is issuing the shares, but BX Limited will have control. Post merger and bigger in size, which is a clear indication that BX Limited will be accounting acquirer. BX Limited will be accounting acquirer. So in this example, legal acquirer is ABX Limited and the accounting acquirer is BX Limited. So look at the question from BX Limited point of view. Okay. So BX Limited assets and liabilities, share capital, all will be recorded as it is. It will be treated as if BX is a continuation only. And the other entity that you will acquire will be recorded at fair value. So now write down note, following steps have to be followed. First write down for BX Limited, asset, liabilities and reserve record at book value. Asset, liabilities and reserve record at book value. Shares issued will be recorded at book value. Point number 2 for AX Limited, assets and liabilities record at fair value. Share will be issued at fair value. Shares issued will be recorded at fair value of the business. Shares issued will be recorded at fair value of the business, which is rupees 11,000. Then point C, right? Goodwill or gain on bargain purchase, if any, will be recorded. So you just visualize, we are solving the problem for BX and it is acquiring AX while passing the journal entries. For BX Limited, nothing, no goodwill or gain on bargain purchase will arise. You are going to just copy paste the entire book values of BX Limited. But for AX Limited, because you are going to record at fair value, there may be some difference, and the difference will be goodwill or GOBP, gain on bargain purchase. Now write down, first question was calculate the consideration to be transferred. So specifically if they ask you, then write neatly computation of consideration transferred. Computation of consideration transferred, then dash AX Limited. For AX Limited, we will take fair value of the business, which is 11,000. So the fair value of the business is 11,000, and fair value per share of accounting acquirer. To calculate the number of share to be issued, we will use the fair value per share of accounting acquirer. Fair value per share of accounting acquirer is 14,000, which is the value of BX Limited business, divided by 700, which is the number of shares of BX Limited. So therefore it comes to 20. Okay. And then point number C, write down number of shares to be issued. A upon B, 550. And point number D, discharge of purchase consideration. Point number D, discharge of PC. 550 equity share of rupees 10 each, issued at a premium of rupees 10 each. Issued at a premium of rupees 10 each. 11,000. Is it right? Got it? Now write down consideration transferred dash BX Limited. Now for BX Limited, we will just take existing number of shares at rupees 10 each. For BX Limited, which is the accounting acquirer, we will take the existing number of shares at face value 10 rupees each. So write down purchase consideration 700 equity share of rupees 10 each, issued at par 7,000. So what you'll do, you'll pass separate entries for AX BX or one entry only? Separate, because one will be at fair value, one will be at book value. So first we will incorporate assets and liabilities of AX Limited. Wherever fair values are given, take fair value. For example, PPE and inventory, two items for which fair values are given, PPE and inventory. So those two items you take at fair value. Other assets and liabilities you record at book value. Start. PPE account debit 9,500. Keep the question in front of you. Investment account debit 1,050. Inventories account debit 1,300. Why? Fair value. In bracket fair value. Trade receivable account debit 1,800. Trade receivable account debit 1,800. Cash and cash equivalent account 450. One line blank. To trade payable, somewhere below trade payable, book value 1,000. To borrowing, book value 3,000. To consideration payable 11,000. To consideration payable 11,000. So balancing figure, just check, is it goodwill? Is it on the debit side? Balancing figure, check 900. Check and then write. Being assets and liabilities of AX Limited acquired. Right, 900 is balancing figure. Being assets and liabilities of AX Limited acquired. And then what I'll do, I will first settle this consideration payable. Next, entry number 2, consideration payable account debit 11,000 to share capital account 550 share into 10 5500 to securities premium 5500 550 into 10. Being purchase consideration paid. Come back to your question book. Now you copy paste the entire SOFP of BX Limited. There won't be any difference. So start from the first line. PPE account debit 7500. Can you see that? PPE account debit 7500. Investment account debit 550. Inventory account debit 2750. Even if the fair values are given, ignore it. Even if the fair values of PPE and inventory of BX Limited are given, ignore. Trade receivable account debit 4000. Trade receivable account debit 4000. Then cash and cash equivalent account debit 400. To trade payable 1500. To trade payable 1500. To borrowing account 4000. To borrowing account 4000. To share capital same 7000. And to other equity 2700. Being assets and liabilities of BX Limited. Being assets and liabilities of BX Limited recorded at book values. Recorded at book values. Now what is one more task pending? You have to prepare, write down statement of financial position. Statement of financial position of ABX Limited. As on, write down the date 1st January 20x3, write down 20x3. Okay, 20x3, as on 20x3. Now first you draw the format. Today I am going to test your ability to calculate the SOFP, right? Let me see who is able to complete it first and correctly also. First and fast. Okay. Anybody got it? Tallied? Format? Tallied? Okay, now check the answer. First, you check the answer. Is it telling? Property, plant and equipment 17,000. Goodwill 900. Financial asset, investment 1600. Inventory 4050. Then financial asset, trade receivable 5800. Cash and cash equivalent is 850. Equity share capital 12,500. Other equity 8200. Non-current liabilities, financial liability borrowing 7,000 and current liabilities trade payable 2500. Is the total tallying? How much? 30,200. Then you write down note 1 share capital. Those who have not written, write share capital authorized. Authorized issued and paid up, authorized dash dash, not given. Issued and paid up capital. Issued and paid up capital 1250. Equity share of rupees 10 is fully paid up. 1250 equity share of rupees 10 is fully paid up. 12,500. All the above shares have been issued. All the above shares have been issued for consideration other than cash. All the above shares have been issued for consideration other than cash. and then you write down notes to account. Second note, other equity. Other equity securities premium 5500 and other equity 2700. Total 8200. Done. Any query? This balance sheet is telling. This chapter is over.